And we're going to be looking for what opportunities we have going into our afternoon and then into the end of this week. I wanted to start off here inside of the dollar, and we're looking at a monthly chart, extremely long time frame. And what I want to just revisit here is these little white ovals. We've drawn these up here just to give a little bit more visual context to this idea of a credit cycle. And what is really interesting about the US dollar is that there's this pattern of 3 years of dollar weakness and then 1 year of dollar strength, and 3 years of dollar weakness and a year of dollar strength, and then 3 years of dollar weakness and then a year of dollar strength, and then 3 years of dollar weakness, a year of dollar strength, and 3 years of dollar weakness, and then a year of dollar strength. And what you'll find fascinating about this is that, yes, the dollar strength trade does have a headwind. It creates a headwind for the indices, but the US dollar is really, in that credit cycle, is really what has fueled the crypto winters, 1 year crypto winter, 3 year crypto spring, summer, fall. And it's been fascinating to watch this over the last decade, and especially in the last 2 cycles, because it has been so consistent inside of the cryptocurrency markets. You can see, coming out of the beginning of the crypto winter, or going into the beginning of the crypto winter in October, November of 2021, we had already been lifting off from those levels. And it was a year later, and what happened? We ended the crypto winter. And Bitcoin was at 15,000. It went to 128 in that 3 year period. And even last summer, the US dollar was not making lower lows. It was starting to rally, and it rolled Bitcoin and the rest of the cryptocurrencies over. And really, there was a lot of profit taking, kind of front running the beginning of the crypto winter, and it's getting more prominent in that way over time. But the question that we've been asking here after dipping into these lows in January is, how much dollar strength are we going to see? And we were making the case at that time that, if there was going to be a dollar strength trade, which we have confirmed at this point, there was a double bottom, there were 50% shorts, and that they broke extensions. And then we had our very first traditional long setups after trend breaks. This is where the extensions and now the extensions of the extensions come from. And we are going straight up right now. Think of the market participants that are essentially raising US dollars. They're closing their positions and they're converting to US dollars. So as we move forward here into the end of the week, we're going literally straight up. And it's very unusual to just go straight up in extensions of extensions, but that is what is defending here. As long as we're holding above these 61.8% lines, then we have even a very ugly close today, and then gap downs on Sunday night, Monday again, as we go into the beginning of next week. So the dollar and its inverse correlation, which is very strong right now, is creating that arbitrage. To go along with it, the financials are falling, and the financials selling off here from a failed breakout at highs. We don't necessarily know, how big. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.